everybody. It's Saturday, the 5th of July, 2025. We're doing our weekly tech roundup with my friend, Keith Tier, the publisher of That Was the Week tech newsletter. This week's newsletter is all about what he calls the AI gold rush. Keith and I are both away in July, so we won't be doing a show for about another 4 weeks. Our next show will be at the end of July. So I thought we might also use this opportunity, Keith, to talk about the first 6 months of 2025. At the beginning of your interesting editorial this week, you describe what you call the AI gold rush as not just another wave, it's a phase shift. What does a phase shift mean?
Could mean a lot of things, Andrew, couldn't it? It's one of those vague terms.
Well, you're using it. That's why I'm asking.
So what I'm capturing in that phrase is the substance of this week's articles in the newsletter, which really describe a bunch of changes underway that are quite seismic in their impact. And the first is the bifurcation between highly valued and funded AI startups and everyone else. The second is the shift away from advertising as a business model towards, let's call it toll booths, where AI has to pay the publishers. And the third is the changing job market, which is huge. And there's probably more. I think in the editorial there's 8 actually, but
yeah, there's 8, and we'll get to those in a second. But are you suggesting then, and your 8th, Keith, it's always good to get to the end before we start, your 8th is that 2025 isn't just another year, it's the inflection point. What's the difference between inflection point and a phase shift? Or are they the same thing? Is it just...
Yeah, a phase shift describes the moment. An inflection point describes the likely future. And the moment is a tipping point, if you will. A phase shift is more like a tipping point. An inflection point is a tipping point where you fill in the blanks on what it is tipping into.
So let's introduce maybe another phrase, a simpler phrase. It's a big deal what's happening. You call it in your editorial the AI gold rush, but I think that's a little misleading, because when we think of gold rushes, we think of rushing to things that probably don't exist. So in California, for example, with the original gold rush, there wasn't a lot of gold, but we're not talking about that. I mean, this is real, is it, in your mind at least?
Yeah, I mean, gold rush is appropriate this week because of the huge deals Meta is giving to new hires. I mean, massive deals.
$100 million deals to individuals. We talked about, or someone predicted, I think it may have even been Zuckerberg or Musk, that you would have billion-dollar companies run by individuals, and Zuckerberg's making that possible in a weird kind of way.
And also what OpenAI did with Johnny Ive, which was $6 billion, arguably for a company that was mainly about him.
Yeah, although Johnny, I would rather invest 100 million in an AI whiz than Johnny Ive. It has been, wouldn't you?
I think you're right, Andrew. But you need more than one of them. That's the problem. So it adds up.
So anyway, so it's beyond a gold rush. It's more than a gold rush. I'm not sure what words we would describe. It's for real. First 6 months of the year, as you say, a phase shift, inflection point, whatever it is, it's a big deal. You spent a lot of time, Keith, looking at the VC market. Your startup is reinventing venture capital. You argue in the editorial that venture capital is being forced to play a new game. What is this new game?
Venture capital really is 3 different things. So what I'm talking about with the new game is what the later stage investors are having to do, which is the third of the 3 types of venture capital. I think the seed investors are pretty much doing what they've always done, which is trying to find future big outcomes early. And the guys in the middle are doing what they've always done, which is, doing B rounds and C rounds to jump on the bandwagon of success. But the growth guys are raising huge funds, I mean, multi-billions, and are making bets where they're prepared to underwrite checks over $1 billion for a gain of 3, 4, 5x. When we get to the post of the week this week, you'll see one such investor, which is Index Ventures, who are one of the middle guys, returning something like $14 billion. Maybe it isn't as much as that, but a very large amount from just 3 deals this week on 3 exits. So, that doesn't sound like venture capital. Venture capital is meant to be, reasonably medium-sized or smaller checks chasing 100 times your money. But the game now at the late stage is much, much bigger checks chasing 2 or 3 times the money.
So it's all about scale, and that's another point you make, but it's always the point in Silicon Valley. You say scale isn't just an advantage, it's a necessity for survival and dominance, which is as true for these AI startups as it is for the VCs investing in them. But is that any different? I mean, scale is always the word that people throw around. They have been doing in Silicon Valley for ever since I've been here, the last 30 years.
Well, it's different numerically. I mean, there's never been a time when people were investing double-digit billions into companies that are.
But let me rephrase the question then. I mean, maybe it's a rather naive question, but is that ultimately that much difference between investing 10, 50, 100 million and $1 billion or 2 billion or 5 billion? It's just money, Keith, as you would always remind me.
Well, to insiders, it's massively different. If you think that something like 80% of all the venture capital raised this year has gone to 5 firms, 5.
List them. Let's just remind ourselves of who they are.
Andreessen, Sequoia, Coatue, Lightspeed. Can't remember the other one.
It's a winner take. I mean, as everything in Silicon Valley, it's a winner take all market.
But it's structurally changed to be much more barbellish. If you understand that reference, the barbell is when on the seed stage there's a lot of activity, and on the late stage there's a lot of activity, and there's not very much in the middle.
Which is true of the entire digital economy. It's been true ever since I've been watching it. The disappearance of the middle.
Yeah, and so structurally it's changing shape. But if you are a startup, unless you can catch one of those late stage investors, you probably don't have a chance, because the table stakes to participate are so large that you need to underwrite market entry, not just growth.
As more of a pessimist than you, Keith, always looking for disasters, you're always looking for the opposite of disasters. I don't know what the word is. It seems to me that if everything is going through 5 companies and 1 or 2 of them fail, then we have a huge problem.
Well, who's we in that sentence?
We being the rest of the world, America, everybody else in the economy that they're controlling essentially or managing.
Well, so my assumption is that the winning companies, and I think there's more than 5, it's probably somewhere between 20 and 50 companies that are at scale in this new era. The winning companies, if we can believe the likely outcome is the growth of GDP, not just in America, but globally, due to productivity gains and the cost of labor declining, then the winner will be everybody. Everybody wins.
Yeah, I mean, this is where you and I radically disagree. I don't want to get to this yet. I want to come to this later in the conversation. But I have to put myself clear here. I fundamentally disagree with you, but that's another issue. But leaving aside that, my question is more about
where you wouldn't disagree is that would be the goal. You and I would both share the goal that everyone benefits.
Yeah, but the VCs don't care about that. They just want to make their money.
Well, they make their money no matter who benefits, as long as they're in good companies. But it's what the output generated by this new technology.
Okay, but let's leave that for the moment. Let's just focus on this issue that you discuss in your editorial of scale being an advantage. It's not just an advantage, it's a necessity for survival and dominance. Let me rephrase the question to you. Does that make the broader economy more or less vulnerable, more or less liable to some huge dip, crisis, or perhaps uptick?
I think the economy is super complex and there's no single point of failure.
So well, the AI economy then, leaving aside the broader economy.
The AI economy, I don't really see a scenario that could lead to failure anymore. I mean, I think one of the big trends in the first 6 months of this year is the removal of doubt that AI is both real and impactful on economics in particular, but probably on everything. And, you know, so I don't really have that. Well, at least I can't think of a set of events.
Yeah, you and I disagree. I mean, again, I don't want to.
What would you imagine could happen?
I mean, what one I could imagine happen, for example, is that OpenAI fails somehow because it's still not a profitable company, or that Altman gets revealed as some sort of fraudster, which he already has been.
Well, I mean, they're at 14 billion annual revenue now. 14 billion.
Well, we will see, but you and I have disagreed on that. So, okay, so scale isn't just an advantage, it's a necessity for survival and dominance. But so what? Who cares? I mean, is that it doesn't seem that big. I mean, excusing the pun, it's not that big a deal.
Well, with my startup hat on at SignalRank, I can tell you it's a huge deal. Just to give you a sense of it, my market for what I do is roughly $700 million a year that I could be investing. I'm currently investing annually about 20 million. So the gap between the scale I would need to really do a good job and where I'm at is quite large.
But my heart, I mean, I want you to succeed, Keith, because maybe you'll take me out for lunch or something, but my heart doesn't go out to middle rank investors. Who cares?
No, I'm not asking for you to do that. Mine doesn't either. What I'm more doing is, look, if I succeed, retail investors, meaning you, can invest in very high growth venture-backed companies. And if I fail, they can't. So if I can't put to work a much larger sum annually, I'm failing to deliver on a human goal. So scale for me correlates to a good human outcome.
Although if you take your argument to the level, and we'll come to Vinod Khosla later, that there'll no longer be any need for work in our AI age, then investing is work. I don't know what the big deal is. Anyway, let's move on to your fourth point about tokenization, getting it, and I'm quoting you here, its moment in the sun. What exactly is tokenization and what's happening? What has happened over the last 6 months, and how is that connected with the AI revolution?
Yeah. So tokenization should be thought of in the same part of your brain that you think about securitization, which is what the stock market is. You know, a company creates securities that you can buy and sell. Well, there's all kinds of regulations around that. A company could also create tokens that represent their underlying shares, but they don't, because there's all kinds of regulatory things preventing it. What happened this week is Robinhood did it for them. Robinhood basically went out and bought shares in companies like SpaceX and others. OpenAI were the two they announced. And they created a tokenized version of those shares sitting on top of the shares they'd bought. And in Europe, where the regulations are less stringent, Robinhood users can now buy OpenAI and SpaceX tokens that give them a slice, so Robinhood claims, of the underlying shares.
Which actually contradicts what you said earlier. So the ordinary retail investor like myself could actually get into OpenAI or SpaceX, which actually makes me much more nervous about the long-term
you couldn't
viability of this boom.
But just to be clear, you actually couldn't, because US regulations prevent us
from being
well,
my equivalent of me in Europe. Then.
The equivalent of you in Europe could do it. They can already buy shares via apps like Revolut American shares. So tokenization really brings the capital sitting in crypto markets to share purchases.
So it's democratization in a way.
It is, and it isn't a contradiction, by the way. Signal Rank is very far down in accepting crypto payment for our index shares. What you're seeing is a convergence of three things: private markets, which normally are not available to retail investors, public markets, and crypto. Robinhood this week.
Yeah, it's fascinating, Keith, and it's sounds to me like a recipe for, again, disaster. We're back in 1999 with cab drivers buying Yahoo stock, basically.
Well, it could be a disaster if bad actors persuade people to buy overpriced assets, and that already happens in the stock market. We have a competitor called DXYZ as the ticker, who owns $70 million of SpaceX and Stripe and other shares, and trades at 5 times the value of the underlying
it's not
assets.
just, I mean, you may have a competitor who is not quite kosher, but it's not just about bad actors. It's people. I mean, going back to your gold rush metaphor, it's the culture of the gold rush where everyone believes that this thing will only create profit, so they buy and buy and buy until the market crashes. That's a classic. It's a classic boom, isn't it?
Oh, bubble. A boom is more.
Well, boom, which always results. I mean, irrational boom, irrational exuberance. People can't imagine losing anything, and then they do. And it's always the small investor who loses first and loses biggest.
Well, if you think about history, capitalism, relies on this being true. What you just said has to be true for capitalism to work, because think of the East India Company back in the days of merchant capital. Everyone piles into whatever the growth asset is at any given moment, because where the growth is where the value is. So growth and value correlate, but also overpricing lives there. And so you only really make money based on timing and prudence, but you can make money because there's real value.
Yeah, but I don't even, I mean, again, there's a broader economic argument. I mean, you had the tulip craze of the 16th or 17th century. I'm not sure there was a central value in tulips. Anyway, let's move on to Cloudflare's paper crawl initiative is a shot across the bow of the AI giants. We talked about Cloudflare last week. You have some interesting posts in this week's newsletter about Cloudflare. I know John Battelle has written something interesting. Cloudflare are the good guys then here, Keith. What are they doing? Why are they reframing perhaps the economics of the AI age?
So what they're doing is they're building an internet level technology that has two elements. The first is it blocks AI crawlers from reading your site, unless the AI crawlers don't comply. But that would be a legal problem for them. So they've created a blocking technology. And then secondly, they've created a marketplace where publishers can go and allow the crawlers through if they pay a certain amount for getting through. And Cloudflare's belief is this will create money flowing from AI training and post-training into publishers' bank accounts.
Yeah, so it replaces advertising. It's this new toll economy, which may not sound that good, but is certainly better than the old advertising economy. Hamish McKenzie from Substack writes an interesting essay on that in this week's newsletter, Beyond Can. What I don't understand about what Cloudflare are doing is if they only control 20% of the market, why don't the AI giants just go to the other 80% and leave Cloudflare, or they don't have that option?
Cloudflare has some really important customers whose content arguably would be more valuable than mine, let's say. So I don't think they can ignore it.
Nothing is more valuable than your content, Keith.
I gave you that bone.
Yeah, that was a softball, as they say.
A softball. But so Cloudflare is important. 20% is a big number, by the way. And I think with this announcement, they'll grow that customer base from publishers. They probably should do a deal with Substack to make every Substack part of this, because that would correlate well to Hamish McKenzie's point in the Beyond Can article, where he's really looking for revenue streams for publishers that don't involve advertising. By the way, I do think Hamish is a bit of a zealot there.
Well, he's self-interested. I mean, he'll always argue whatever benefits Substack is good for him, which I guess is the way entrepreneurs work.
Give you an example. This week, I opened a discussion with one of the Cloudflare founders about whether they might sponsor this newsletter. That was the week. And they're very interested in doing that. But Substack doesn't have any technology that allows a sponsorship, so you have to do it manually. And that's probably foolish.
Well, that's not that hard. And actually, you forgot to put the piece in about Substack, and which references my Substack. I don't think it's that hard manually. We could just announce it, and I hope I'm going to get a cut. If
well, they have to want to sponsor Keen On. At the moment, they want you. Unfortunately, you're often on the wrong side of the arguments for them to sponsor you.
Well, what about this show?
This show isn't sponsorable. It's the newsletter they sponsor.
Yeah,
they might sponsor the video as well.
If we say nice things about Cloudflare, well certainly. So you think this is a big deal? Paper crawl, total economy is not a bad thing.
I think it's a very smart move. Cloudflare, prior to this announcement, really didn't have a play in AI at all. Now they have a big play.
And does that also address the IP issue? If you're paying per crawl, then you can also somehow some of that goes to IP.
Well, I think the status quo legally is there is no IP.
Well, we talked about that last week. It's not entirely clear. There's going to be many court cases over the next years dealing with it.
But I think it compensates you for being used to learn on, which arguably correlates to getting paid for your copyright. But I don't think Cloudflare would be foolish enough to say that, because then they would be subject to losing a law case where there was no copyright.
Well, now you've revealed that you're trying to get Cloudflare as your sponsor. I'm a little more suspicious of all this good news about Cloudflare. So let's move on to your seventh point. In a world, and again, I'm sure this is that different. In a world where everything digital is infinitely replicable, how do we build something that lasts? I mean, that's another old question, Keith, which I guess has been brought to a head by AI.
Yeah, this is Packy McCormick in Not Boring. And
yeah, he writes about the great differentiation, what differentiates value from everything else. And he also talks about Vlad Tenev and Robin Hood. So this is all connected.
Yeah, he basically is making the point that some things are foundational and will last, and other things are temporal and won't. And the distinction between the two, he puts down a lot, by the way, to storytelling, persuading people that you represent a lasting trend. So there's a lot in this about storytelling rather than technology. So if you look at OpenAI, their story is that they're providing everything you would need to consumers for anything they might want. Whereas, let's say, Google's story is they're providing developers with platforms to develop on. And they're very different stories, even though a lot of the technology under the hood is very, very similar. So I think Packy is onto something, that human beings buy narratives and brands and belief systems.
And speaking of humans, the human in the loop remains indispensable, maybe because we tell stories, and to win in AI, as Packy McCormick says, you've got to tell a good story, and humans digest good stories. They're consumers of narratives. Is that how the indispensability of humans is going to be retained in the AI age, Keith, through the telling of stories?
Yeah, well, Well, actually, this article relates much more to the technical realities of using AI for people who are building things. So when they talk about the indispensability of the human, it's really to do with product vision and execution and the ability to know whether what has been built is what you want it to be built. And so it goes into a lot of detail about the best way to use AIs to build things. And it, my experience concurs with the main point in this article, which is the AI alone currently is only as good as the person driving it.
If there is indeed a person, that's your inflection point. But you link to an interview with Vinod Khosla, who is very explicit, unambiguously explicit that work is going to go away in this age of abundance. Yeah. He promises that. You've always promised that. But the news this week, Keith, is of cuts. Microsoft cut 9,000 jobs. The Wall Street Journal acknowledged that CEOs are now saying the quiet part out loud. AI will wipe out jobs. The Guardian talks about the disastrous impact on graduate jobs. And most of all, the Wall Street Journal describes young graduates as facing an employment crisis. So isn't that the real story? Certainly of the first 6 months, if not of our entire AI age, that people like you and Kosa can talk about some abstraction called the age of abundance and work will go away and blah, blah, blah. But in America in 2025, it's just not realistic. It's catastrophic.
Well, I think what you're saying is it is realistic, but not good. Right? Is that what you're saying? That, yeah, jobs are going to go, but it's not a good thing.
It seems from the numbers anyway, I'm careful with inevitable, but it sounds to me as if from all the numbers from Microsoft to the journal and everyone else doing research, that this is beginning to impact the broader economy and the knowledge economy. People who go to college for 4 years in order to acquire skills that will give them valuable labor, that those people now are struggling. One of the reasons there's some macroeconomic reasons too, but one of the main reasons is AI.
Well, I would say, you and me, our careers have kind of told the story of this several times. What happens repeatedly is that the skills required become irrelevant due to technical changes that mean what is needed is now something new. I remember I've done this a few times in my career, but I used to be a database guy, and then I became a networking guy, and then I started an ISP, and then I moved to America and I became a
Right. No, I take your point, and I've done the same thing, but this is different from what Coast was saying, and you've also said this.
Yeah, well,
that work will go away. So we're not talking about different kinds of work. Work will go away. Do you agree with that?
I think it's one of those predictions that I would agree with, but it's a bit like saying if a broken clock will be right, twice a day. It will go away. We don't really know the timing. We don't really know how many new jobs will be created in the interim versus old jobs going away, but I suspect more jobs will go away than will be created. I do think if I was a graduate, I would completely be rethinking my use of AI so that I remain relevant. There's a great piece in this week's newsletter by Google launching an education platform for teachers under the education section at the end of the newsletter, which is applying Gemini to education. And I think it would be foolish to try to continue to be a person that looks after horses 2 years after the automobile was invented. You've got to rethink who you are and what you want to do. And I think anyone with skills, as we've seen with Meta, is hugely valuable in this.
Yeah, that's the irony, is that in this age where everyone seems to be losing their jobs, the value of AI superstars is even higher than it's ever been, $100 million apparently.
Yeah, and that in a way is McCormick's differentiation. my subtitle this week is no differentiated developer left behind. And differentiated means you're modern. You can use the current tools, and therefore you become a 100x developer just because of your capabilities.
But the real question, I take your point, and I think you're right on that, but can you have, in America at least, 250 or 350 differentiated developers or workers of one kind or another? Isn't that just going to result in a winner-take-all, a broadly winner-take-all economy where a tiny group of people have all the value?
I don't think, yeah, you're right, but it isn't different. I mean, the S&P 500's growth over the last 100 years has been fueled by less than 20 companies. It's always been a winner-take-all economy. That's capitalism. I mean, we can argue about whether we should change capitalism, but as long as it's capitalism, the money flows to growth and success, and especially to new capability. And so, in a way, if you're not getting any of that money, it's your fault for not being awake at the wheel.
Well, I'm not awake at the wheel because I'm not getting any sponsorship from Cloudflare, but I'm going to change.
Neither am I yet, Andrew.
Well, finally, let's end on a capitalist note, Keith, before we take a month's break. Your post of the week is from Harry Stebbings on Index Ventures. What's the big deal here? How are Index Ventures? Why are they the most underrated firm in venture right now? And is Harry Stebbings right?
Yeah, so Index Ventures was started by Danny Reimer and his brother. Danny used to be an analyst at Hambrecht & Quist. He was actually part of the Real Names IPO team when I did an IPO filing with Real Names. He moved to Switzerland and set up Index Ventures quite a long time ago. And they have been a European investor for 2 decades and have a Silicon Valley presence now as well. And in the last 3 weeks, they've had 3 exits. It's $8 billion from the 3 exits returned to their investors. So that's actual cash going back to their investors.
And that's Figma, Wiz, and Scale AI.
Yeah. So obviously, this winner takes all only works if you are in the winners. And so the art of venture is getting into the winners. Interestingly, all the seed investors, by definition, are in the winners because they're the first investors early, but they don't own enough of them to make these kind of numbers. Index come in with much larger checks much later, but still medium-sized checks, and get massive multiples. It more or less tells you that the sweet spot to invest, if you're a good investor, is the B round.
Yeah, which you would say that, Keith, because your new business is in the B round. Finally, you suggested that 2025 is an inflection point. We're going to take a break in July. Our next show will be right at the end of July. So, and we will spend the next 6 months after that, seeing what happens in tech. Does something need to happen, Keith, in the next 6 months of 2025 for the year to become an inflection point, or is it already one?
I think it's already one. I mean, some people might answer that saying AGI. I'm not a believer.
Yeah, which is very unrealistic, firstly, and secondly, everyone has a different definition of what AGI means.
Yeah, so I don't expect any substantive, improvement. There will be incremental improvement, but I don't expect a transformational improvement in what AI can do. I think the biggest challenge is for AI to become what is called deterministic, that is to say factual, using data, queries and results, from structured data. It isn't very good at that yet. And I think that it will be addressed through agents and such. But I don't expect massive change in the rest of this year. I think the main thing that will change...
So we can put the show to bed, Keith. You don't need to do it anymore.
Well, the main thing that will change is scale, because the revenues of these big companies are growing so fast.
To quote you, scale isn't just an advantage, it's a necessity for survival and dominance.
Right. So you're going to get differentiated scale.
Well, where are you going, Keith, in July?
For the first half of July, I will be in Italia.
Have you heard that they serve spaghetti 3 times a day in jail there? So you better be careful.
You know,
Otherwise, you'll come back looking like a spaghetti.
It's a rule in Italy. You're only allowed to have spaghetti for lunch. No dinner spaghetti.
Well, we'll have a weigh-in next time we do the show. Keith Tier, as always, an honor. I hope the Cloudflare people are impressed with this. How much are we going to ask for sponsorship, Keith? 100 mil?
You know, the stakes are high these days, Andrew. We should aim high.
And what am I going to get out of that? Like $1, one free lunch?
I'm going to try to negotiate it only for the That Was the Week newsletter, so you don't get anything.
Well, on that note, we will end. Have a lovely time in spaghetti time in Italy. I'm going to Africa, and we will talk at the end of July. Thanks so much, Keith.
Bye, Andrew.